All right, everyone, let's start by testing the sound here. Was that a little low? Oh, hold on. No, that's fine. All right, again, I apologize a bit. I am at my parents' right now. So I'm sure this will work from here. So I'm going to just shrink this over like that. Okay, limited screen real estate too. Kaboom. Hello. All right, that's working. So if I do that, that's also working perfectly. Awesome. Ugh. All right, so again, thank you all for coming. If you're new here, essentially what I do is I take, oh yeah, it's a great view there. I take this live once a week. I go live publicly for everybody. And I basically go through the process of what I do every night that the Stats Edge Pro members get every day, where, you know, we're gonna talk about nope, this one, nope, this one. Aha. Yeah, so we're going to talk about the crypto markets, the Forex markets, the equity markets, what's going on. I think this is going to be very interesting right now because the markets are a little bit funny. A lot of people are saying sell off, but I'm going to give you guys some evidence about why I don't think that that's the case. We'll talk about the free videos that I made this week for the individual symbols that are out there. And then we'll scan through, and as I scan through, we'll do whatever chart requests you guys want. So we'll talk about, whatever you guys want me to take a look at. So save that until the end bit, and then we will go from there. So step one is going to be go over what I made videos about this week. Then we'll get into the markets, just because I like to do in that order, because I think most people are interested in the whole market thing. So it allows people to kind of filter in. So let's get into it. First, I have to go to my channel. I have this chat up here. I also have the Stats Edge Pro Discord. So if there's anyone from Stats Edge there, oh man, I go to my YouTube and I see Meet Kevin with 7.2K viewers, and I'll be happy to get 10. We're getting there. We're growing, guys. Oh yeah, some cool stuff this week. So you guys may have noticed I'm kind of weaning off those short videos a bit. Whatever you guys want is what will show up on this channel, right? That's what, but as long as it's not, here's a Lambo, here's whatever, because I'm just not that guy, nor will I ever be. But I'm trying to do more long form content just because I'm seeing more likes and engagements and everything with that than those shorts, which were really popping off for a while, and not so much anymore. So last one was on the 10th, which was Friday, right? So that would have been the first one, which was Fubo. So let's go into Fubo here. Essentially, you can see I have this line here. This is where I wanted Fubo to break this kind of 38.77 level. I don't even know what that circle's doing there. And what's this thing? Okay, but yeah, it's this vertical line. So I was looking at, oh, it's a different color on this one. Yeah, so I was looking at this basically to see if we could break this downtrend line. We obviously didn't, but we are actually holding support pretty nicely. So I may keep this one on watch just because of that. But yeah, I was looking for basically this triangle to break out. So still looking for it, I guess. And let me actually just create alert on this line. Again, if you guys don't know, this is TrendSpider. I use both TrendSpider and TradingView. Both do different things well. Yeah, so basically above 30 is where I'm interested, but there was no trade on that one. Next, I did this video. I don't think there's anything that will break if I show you this, right? This is my YouTube studio. So I'm going to put this in the chat. If you didn't see this, it actually worked out to be kind of cool where I went through, and we can actually go to the blog post here. If you're on my email list, you would have gotten this. If you're not and you're interested, then you can go to statsedgetrading.com, which is in the description below as well, and you can sign up for my email list there. Again, everyone will tell you, don't spam you. You get one email a week when the stream's about to go live, and then if I do a new blog post or something that I think is interesting. But basically what I did here is I just did some math on closing at the low of the day on the SPY, which, again, some of the pro members will know there's some cool stuff that I'm building with that. And it turned out that a 3-day hold after, going back till 2009, was actually a wicked idea. So this kind of, and we'll note this for later, but 45 or 445 in the SPY is going to be interesting there. So that's what that video was about. I did that one. Pretty well received, I think. No comments, 13 likes. Again, and this is what I look at to see what I should make, right? See what people like here. So that was interesting. And then if we go and we look at the SPY for a 3-day hold after, right? We buy here and then 1, 2, 3 and sell in the close. It was a great trade again. Now we're obviously under that now by a little bit, but again, I'll get into this later. I've got a whole thing planned because the market's finally interesting, right? Icpt was the next one. Icpt. So Icpt, I am in. Basically, I was looking for it to break out over this level. It did just that, held for a couple days and closed higher. I bought my position and I'm still in my full position. Nothing to do here yet. Basically just going to see what happens. This one's gotten hammered. So if we get up to this kind of $20 area, which, right, if I draw that in, around $20, you can see it's these recent highs here and these recent lows here. Let me use the mouse instead of the trackpad. Yeah, so recent highs in through here in this area, that could be a reasonable target for this is $20. Again, that'd be great. That'd be a great little return for that, but nothing done there yet. And then the video I put out, oh, this was for the TI strength alerts, which was the last one for that. And that one's been some interesting, I didn't even look at First Solar today. Yeah, that's really, I'm going to add that to the list right now before I forget. Let's put it in there. So this was one of the TI strength alerts. Again, if you don't know, Trade Ideas basically has a algorithm that I created. We just called it TI strength alerts because it's looking at this concept of relative strength and why that's important. Overall in the market, I go through that. I go through how I'm trading these things, recent performance of some of them, everything like that. Let me just grab a link for that as well. In case you haven't seen that one got pretty good reception as well. We had one guy or two guys that didn't like it, but that's fine. So that's kind of the video wrap up. And now let's get into the market, which I think is the most interesting part. I'm going to do the crypto and the Forex first, just because I think the longest amount of time I'm going to spend on the equity markets this time. Right. So Forex, let's start with Bitcoin. Again, the tail since the longest time has been this sub $50 area, right? If we can't get through this zone quickly, the longer this takes, I think the worse it is. Basing below these prior resistance, and then we broke up into it. So we had these lows that were holding us down for a while. We broke up into it, but we just can't get through. So really, Bitcoin, I've noticed trading it for a while has short periods of time where it's interesting, and then long periods of time where it sucks and you should ignore it. And this is kind of a it sucks, you should ignore it time. And then interesting again, I'm thinking, under 40 or over 50,000. Until then, we're just in a range. Now, this is where it might behoove you to go into a lower time frame and look for some trading, look for some prior support areas that might be resistance and back and forth. I do a lot of shorter term trading on both Bitcoin and Forex, but on the longer term chart, just really nothing to see here at all. It's basically the way I'm looking at it. And really not much different in a lot of them. Let's go to Ethereum, which we know is the next biggest. Same kind of thing, right? We have these ranges where it stays in, and then when it breaks through, it does it violently. And then we have the next range. And then it just kind of chops around there. And same with Doge, right? And it's just not doing anything. One new one that I'm in and I talked about with my members is this Atom USD. Basically, the main reason behind it, again, I don't know what any of these things do. I'm not a crypto diehard or sycophant. I treat these like stocks. They're trading instruments. As soon as something has a chart and it has relatively good supply and demand, I just look at it like that, right? And for this one, we had these breakouts of these prior highs, and then we had a nice pullback into it. And look at the daily chart. Every time we get near this $33 area, we can't seem to break it. So I'm long a little bit of this in the 33s with a stop right under that prior low. Just, again, looking to see if we can have this kind of pullback into this prior resistance area and then push off. But a trade, right? Just a trade. That's all I do with these things. I have some Bitcoin and Ethereum ETFs in a long-term retirement account. I know a lot of Americans might be losing their mind, but yes, we have Bitcoin ETFs up here in the great old land of Canada. So I have some of those in kind of a tax deferred. So just in case these things rocket to 100,000 coin, I can participate in some of that. But again, to me, they're stocks, and I look at them like they're stocks. So just going to play this support zone in the low 30s of Atom. And then if we can break out, great. That's when I'll start to look to take profits. Same thing I did with Algo USD, which I talked about for a lot of my members back in the day. It had the same kind of pattern. Let me draw this in. If we draw these prior highs in, you can see that we pulled back into these and we put in a lot of these bottoming tails. So I bought a bit in here, a little bit before $2, and I was out most in the 220s. And then I got out a little bit more in the 240s, and then it pulled back. So, and I'm watching this one as well. So let's actually do a snapshot of this one. Same kind of thing. It just looks, oops. I don't know why I keep losing my mouse like that. It just looks like these are the strongest ones, and they have enough volume. Every time I take a screenshot, I lose my mouse. That's no good. So yeah, it's just, again, trading them like anything else. They're very volatile instruments. Kraken gives me anywhere from 2-to-1 to 5-to-1 leverage on them, depending on the security. So I just trade them as is, right? I've got a small account over there with a couple bucks in it, and I leverage that up, and I place trades like anything else. So that's it pretty much for the crypto space. It's alt season, I think, is the term crypto nerds use, where the standard cryptocurrencies, the big blue chip ones, aren't really doing anything. The smaller ones are doing considerably more. So, sorry, I'm just looking at every time I see a dot on the Stats Edge Pro Discord chat there, I just want to bring it up just to make sure if they're trying to ping me privately, I see it. Yeah, so that's it for those markets. Again, the alts look okay. For me, it's anything that's above that flash crash high is where it's interesting. So back to Bitcoin USD. You know, this was the flash crash. As long as we're in this inside this candle, essentially, I'm not interested. Above this candle, I'm interested. Below this candle, I'm interested. As long as we're inside, we're just in a range, right? And it's, you know, going to be bearish to me until proven otherwise, just because you have this giant down move and then a chop sideways. You know, who knows what's going to happen from there. Next, just some quick Forex trades I'm looking at. One of these is Gbp Usd, which you can see the pattern I've got drawn out here, and I've been talking about this for the people in a while. I had a short last time it hit this level, sold out some as we tanked, and now we're rallying back up. Again, I'm looking for this to break to the downside just because we have a lot of resistance up in this area. You know, Forex doesn't move very much, so I'm more of an active trader when it comes to it, but that's just what I'm looking at there. USD Cad, I'll be trading on Monday. We're breaking out a little bit here. I like the look of this. Monday, for you Americans, we have our federal election up here in Canada. So I'm going to probably just buy a pack of Red Bull and, you know, zoom into a 30-minute chart and just be trading the Canadian dollar all day. No political chat on this channel, but I just think, right, it's going to move the market. It has to. So we're getting some push out there. And then I also mentioned to people that I am short some CAD JPY, again, for the same reason that I'm kind of bullish CAD. And this CAD JPY kind of looks like we could be seeing a bit of a breakdown there. Hey, Grant. So that's it for currencies. The only other one that I like to play a lot of is Gbp USD. I have these anchored VWAPs drawn from this low, and we actually finally broke down and closed below that today. So I am going to look for rallies in Gbp USD in order to short into those rallies very soon. So if we get, you know, rallies up on Monday, I'm going to look to potentially take some shorts in there. So that's equities. That is crypto. Now let's get into the big daddy. So we do this and we zoom in. We go, oh my God, this is the craziest death market that I've ever seen. Right? Hilariously enough, that is what I'm seeing with a lot of trader friends and on Twitter. I think they've all completely lost their marbles, and let's go for some reasons why. So first of all, let's take a look at there. So these are all of the pullbacks. Are they? No, they're there. These are all of the pullbacks that we have had this year that I've noted on TrendSpider here. They've got this cool little drawing tool that you can draw down. You can say, here's the percentage of the market. And I'm going to talk kind of real slow and controlled here because I'm probably going to take this bit out and make it a video for this week. So let's actually start that again. So time for my thoughts on the equity market with the crazy market that is potentially going on here. We have to take a look at essentially what is going on in this market and whether or not we should be scared and how scared should we be. If I do that, what does that do? That cuts off with my head, doesn't it? I'm waiting for the stream to catch up. Sorry. Yeah. Okay. So let's take a look at the SPY first while we talk about this crazy market and then go into the other ETFs because everyone is just so focused on the SPY, they forget the rest of the world. So let's go through some of these pullbacks that we've had this year. We can start with this one, which was 5%, happened in 3 days, rallied back up. This one here was 6%, happened in maybe 2 weeks, rallied back up. This one here was about 3 1/3%. Here's another 5% one, another 3%, another 3.6, 2.7, and now we're down 2.6. And everybody thinks this time the sky is falling. Let's, batten down the hatches. The end of days is coming. Crazy enough, This is what I'm hearing from actual people who trade the markets all the time. And I just cannot understand why, right? You're down 3% off highs. It's great. That's a market. It's a pullback. Now, if we zoom out, you guys don't need to be CMTs like me to know that this is a pretty insanely bullish trend that we got going on here. Right? If we go back ever since the pandemic, that's a pretty wild looking uptrend. So of course we're going to get pullbacks, right? We're going to get 5 to 10% pullbacks all the time. That's just kind of the way the market works, right? So why am I not worried about it this time? Well, this is admittedly a very ugly bar. And I see Brett talking about the RSP. Don't worry, we're going there. So what is, and this is not to be like existential, but what is the market, right? Everyone says, oh, the S&P is the market because it's 500 stocks and they're the 500 biggest stocks and blah, blah, blah. A lot of people will say that and don't even know how the S&P is weighted. So let's find out. And again, this is a great website that I use called Koifin. I have no affiliation unless there's somebody watching that knows someone who knows someone, in which case hit me up. Apple, Microsoft, Amazon, the Googles, and Tesla make up like 30% of the S&P 500, right? Apple alone making up about 6.5% of the S&P 500 of the SPY. So let's take a look what's going on with Apple, right? Obviously underperforming the SPY. If we go SPY, right? And then we look at Apple, and then let's draw this same, how much are we down from the highs, right? Apple is down 7.5%. So it's doubling the negative return of the S&P 500. And Microsoft's probably doing pretty well. They're down a bit, but they had that buyout. We look at Amazon, AMZN, right? That is down pretty significantly from its highs. So we go down here and we're down 9% on Amazon. And again, these are the things that make up the bulk of the entire market. And go into, what was another big one? Google? No, there's Facebook. Yeah, Google is a big one, but Google's about matching. And now Facebook, from our highs, we're down about 6%. So the major, right, you got to think about how averages work here. If the biggest parts of the SPY are down a lot and the SPY is down a little bit, what does that mean for the rest of the S&P 500, right? It means they're not down nearly as much. So let's take a look at some other indexes. First, the IWM. The IWM is your small cap index. This has been in a range the entire year, and it is in the middle of its range, and it actually closed today in the middle of its range. So showing that this isn't an everything sell-off, right? This isn't a, oh my God, the whole market is selling off. This is a panic run for the door scenario. And now let's look at what Brett was talking about here and what I share with the Stats Edge guys all the time, which is RSP. So RSP, if we go back to Koifin, let's refresh that. Sorry, things may start to go a little bit slow just because I'm doing this again on a MacBook Air. You can see the distribution of the RSP is pretty much around 0.2% per securities, 500 securities, right? They rebalance this periodically. It's not going to be perfect all the time, but way less weighted to these giant FANG tech names. And you can see the RSP is actually holding near its lows and really isn't down that much total at all. Right, it's down about 3%, but again, nothing significant, right? It also isn't up nearly as much as the SPY. So what does this tell us? Again, this is not a broad market everything sell-off. This is a FANG sell-off, right? This is a sell-off of the big tech names so far, and again, I'm not saying that the rest of them can't sell off, but so far, the rest of the market is not participating. It is just these large tech names. So that being said, what may that mean? Well, why are they selling off? And this has a lot to do with the concept that I always talk about with relative strength, is that money has to go somewhere. When you're a mutual fund or a large institution or a hedge fund or something, you have to go somewhere. You're not allowed, physically, you're not allowed to say, hey, I'm just going to go to cash. You just can't, right? They have to be generally 99% or more invested. So where are they going? Well, they can't go to bonds because they're not paying anything. They can't go to money markets. They're not paying anything. Most places can't even go to any sort of cash alternative because everybody's worried about inflation. And if you're in cash during an inflationary period, that is literally the worst place you can be. And that's why I think we're seeing things like the nat gas run that we saw and uranium going crazy. Right? And I think a lot of this is because money is trying to find a place to go. So if money is trying to find a place to go, then it cannot be by design a broad market sell-off. So, right, you see, I hope everyone's following the logical train I'm going through here. And if not, if I'm in mad scientist mode, certainly someone let me know. But if they're not selling, then it's just a rotation game. So then it's our job as traders to try to figure out where they're going to rotate into next. And this is where I will probably not all on stream here, but I'll go through the weekend and I'll go through a list of 100 to 200 ETFs and see where do I think the money's going to flow into, and that's what we'll look at going forward. But I just want to maybe put some calm in with everybody, saying that when people run for the door, and I'm not a perma bull, I'm not a perma bear, I'm not a perma anything. All correlations go to 1 in broad market sell-offs, right? If you want to study this, you can go to 2008, you can go to 2000, you can go to all these periods. When markets sell off as a whole, everything sells off, because that's the time that people are going to their hedge funds and they're going to their mutual funds and they're putting in redemptions, right? They're saying, hey, I want my money back. And then the hedge fund or the mutual fund or the institution can sell. But until that happens, they have to be in something, right? So that's my thoughts, right? The RSP, you can see, as long as we're holding above this area, well, we're just retesting the breakout point. If we break this area and say we sell all the way back down into here, well, we're just back inside of a range. Now, to be honest, let me see if I can find this. That's actually, if you were to put a gun to my head, which thankfully you don't have to, and say, what do you think is going to happen? I think we're going to be in a range for an incredibly long period of time. And one of the reasons is my boy here at All-Star Charts. If you don't know who JC is at All-Star Charts, you should. If you go follow him, make sure you tell him I sent you. He's a market technician and a really good one at that. And here's him going through classic year 2 bull market behavior. So he's showing in 2009, we had this V low, this upward thrust, and chop for well over a year. In 2003, we had these lows after the tech crash, this push up, and then sideways chop for a long period of time. In 1982, we had this sell-off and a V bottom here, a push up, and then sideways chop. 1974, sell-off, V bottom, upwards thrust, sideways chop. Now, let's go out into the weekly chart of the market. We had a pandemic crash, a V bottom, an upward thrust, and sideways chop. Right? So, is there anything unexpected here other than the fact that this chop on those other charts persisted for a much longer period of time? So again, my bet, if you want to nail me down to a bet, is the sideways chop, right? So now what do we do as traders if we think the market's going to chop sideways? Well, you don't buy breakouts, you look for pullbacks. And that's about it. That's really the only major difference with a chop market as opposed to an uptrending market. The other thing you have to do if we're in a chop market is you have to take and protect profits much faster than you normally would, right? Because you can't buy something and hold it for 6 months or so and it's going to rally in your direction. Sometimes you're going to be able to do that for sure, but in a lot of cases you won't be able to. So just if I'm right, and this is not the top of a 10-year long bear market and the world's coming to an end, but is more going to be a pullback or a period of chop, which I think are the two most likely outcomes, then again, just adjust your trading accordingly, right? And again, the guys at Stats Edge Pro will tell you I've been working for a long time on this pullback algorithm for swing trading. That's been performing fairly well. It's producing a little bit too many results than I would like, but that's going to be my plan, is to lean heavily on different pullback algorithms and go from there. But just, I do not personally think that this is an end of days scenario. I just think we're in for a chop. Also, I have this theory, which I just call Max Payne Theory, which I didn't invent, but of the market. And according to Max Payne Theory, I think chop is the most likely, because if you go on FinTwit, you've got bulls battling bears, and you have very few people other than JC saying it's going to be a mess. It's going to be a choppy mess, right? So that being said, let's go into some charts, and I think that will be my wrap up of the market. And again, I'll probably cut out this bit and upload it. I think people like that, but we're going to do some scanning. Actually, let's go through. I brought up Forex Factory, which this is the only news I look at, just see what's going to go in the way. We've got the federal election in Canada, and then nothing for America. And then if we go into the sectors, which I really don't think they matter too much, but I'm going to back off some of these web pages in a second. Again, I got my phone as my web camera. I brought my mic from home. I've got my iPad over here as a second monitor. And then I've got all this running through a M1 MacBook Air for you tech nerds. And it's doing okay. As soon as the Pros come out with Apple Silicon, I'll definitely be upgrading to those. As you can see, there's a little bit of a struggle bus going on here with this. So we'll leave that one for now. And then let's go over here. And if that worked right, let me check. Yep, now we see trade ideas. So I'm going to go through some scanning. This is where chart requests, questions, that kind of stuff can go on. If I pause that will free up some resources for sure. And again, let's just shoot the shit. I'm just here hanging out. So I've got some time for sure. Gonna run this. So I see some questions right away. How do I intraday trade equities? That's like it's gonna take you a couple years to learn that. But just like most things, I'm a pullback trader. It's I see I got stopped out of CVRS at 386 and it ran to 9, now nearly 6. How to better set stops? I don't know. Again, it's not. What is your written and tested trading plan, right? If you actually have a written and tested physical trading plan, then you're on the right path with day trading. If you don't, you're gambling and you're going to get screwed at some point. And that's just kind of what I put it down to. It's not about that trade. That trade is irrelevant. Every single trade you do as a trader is irrelevant. What is very important is your trading plan. So if that stop out happened according to your written and tested trading plan, that's great. It's a good trade. You have to separate what's a good trade and what's a bad trade versus what's a winning trade and what's a losing trade. in which it's going to happen where you're going to get stopped out of good trades, and bad trades are sometimes going to make you money, and that's fine. Most people's win rates are going to be about 50-50. So again, did it follow your setup that you have tested and that you have written down? Then it's a good trade and keep doing it. If you haven't done that, stop trading. You're gambling, right? Go into and try to figure out and build a written and tested trading plan that says, I'm going to buy stocks when they do this, and I'm going to hold them till this period with this stop loss, and then I'm going to get out. I cannot stress this enough. I know longtime viewers probably get sick of me saying it, but that is the difference between winning and losing traders. The ones who sat down and built a trading plan and follow it religiously and know that they're going to be wrong a lot. And that's that's just the way it is. But that trade doesn't matter, right? The next trade doesn't matter. If you're trying to trade for a living, you're going to place tens of thousands of trades. So each individual one shouldn't matter. If it does, if that one stop out's going to keep you up at night, then you trade too big, right? Trade smaller and just say, hey, that was part of my plan. I got hit. Away you go, right? For me, again, I have my own trading plan and philosophy and style that I trade with. I've opened up another account to show again to some of the Stats Edge Pro people, but again, nothing I do will be a signal service. I fade basically mostly when I am intraday trading. I don't really look for the breakouts or the continuation. That's for me more of the swing trader side of things. And I trade generally boring stock, not boring stocks, but I trade in a boring fashion. I can give you an example of a trade I took today. ATR, I think this was it. Hold on. Here's my, ATR. And essentially, right, I look at this thing's obviously in an uptrend on the daily chart, and it was pulling back today. I zoomed into the intraday chart, and again, this is all a setup that I have. And in through here, I have a algorithm, which I won't talk too much about, that looks for essentially areas that I think things are going to turn, but mainly it was the break of this trend line where I entered in through here, and then I exited later in the day, I think somewhere in this area, just because it was multiple times, I think 2.5 times my risk, and that's all there is to it. But when it comes down to it, the trades themselves don't matter. It's, did it meet your written and tested trading plan? Great. If you don't have a written and tested trading plan, then you're doomed till failure. And I know that sounds hyperbolic, but it is wholeheartedly what I believe. It's just, I've met a lot of very successful traders. The things that they all have in common is they're right 50 to 60% of the time, if that, and they all have very systematic plans. What are those lines? These lines? Oh, this is just a drawing tool called Presentify that I do just when I'm presenting. So, all right. So now we can go through chart requests, questions. Just shoot the shit in the chat. I'm going to do some scanning to try to find some things that I think are interesting for Monday. Again, keeping in mind my theory of that this is a big tech sell-off, not a whole market sell-off. Therefore, I'm not super worried about it. The other thing I want to talk a little bit about is the VXX, which I didn't. There's no get up and go here on the VXX, and this is the fear index. So there is no fear really in the market. If I look at gold, it's down. Like, the gold is probably the worst performing investment in a long period of time. It's just trash, right? But there's, again, you would expect to see a spike on gold or Bitcoin or the VIX or something if there was people really getting worried about the market. Again, no one knows anything for sure. Neither do I. I'll never pretend that I do. But that's just the way I see it, is that there's no fear being generated in this market. And again, the only things that are dramatically selling off are big tech names. And say Apple drops 30% from its high. Like, oh well. You know, it's had a epic run. You know, it's insane, crazy. So it's gone from $50 to $150. Say it pulls back to $100. That's who cares, right? So I just think everyone's panicking, because every time the market down ticks, everyone panics. It's like it's cool to be a bear. It's cool to be contrary. We'll talk with Tesla here. If this is your first, whether you're watching live or seeing the video, if you could hit like, that would be fantastic. YouTube, again, emails me like once a week and says, hey, beg for more likes, and maybe we'll make the algorithm like you. Tesla's looking interesting. You know, it's got this level here at 262-ish that it's struggling with. If it can get above that, I think that's great. If not, you know, that's fine. But obviously in a nice trend. You know, it pulled back to this area right here after it broke out. It broke out here and then pulled back into it. It may be going. It's been in a trend for from 600 to 700 to hit this level. So I wouldn't be shocked to see more of a pullback or back and fill. Who knows? Full disclosure, I am in a fair amount of ride. And this is something, again, the Stats Edge Pro people I talked about. Again, just a kind of a counter trend trade. But this thing sold off pretty dramatically, gapped up, and then is actually holding pretty well this gap area. And then it put in this long base, and now it looks like it may be breaking out of that base. So I bought some on Wednesday. And then I bought a little bit more today, as it looks like it might be breaking out. You know, I'm wrong under this area. So a lot of these actually look okay. Like RMO, looks like it might be pointing up. The scam of all scams, the roll the truck downhill guys, actually look like they're doing well. Lucid, LCID, looks like they're poking up as well. So again, if I'm right, and I always want to preface that with a big if, because I'm just like my Twitter bio says, I'm just some asshole on the internet, right? I study charts, and this is, you know, the stream of consciousness I come up with. But if I'm right and we are into a choppy market or a rotational market, which basically means people are going to sell down big tech, use that money to allocate somewhere else, maybe it's EVs, right, with the perk up that these are getting. So you may be onto something. Tesla is going to be kind of your canary in the coal mine. It's going to be your large cap, kind of big daddy tech name. Everything else is going to follow that, I'm sure, to some description. But yeah, I am invested in some EVs and planning on adding if they continue to go. CARG. Car Gurus looks good. I don't really see a setup there, but it's up there. It's breaking new highs. Walmart, nice pullback on Walmart. Nice pullback area going on right here. Right, we have the prior resistances here, and that's maybe acting as support. One thing I will say is if your synopsis is that the market is, in fact, going to turn bearish, Walmart's a good bet. It's usually a pretty substantial flight to safety when it comes to, you know, trying to put money in a place that will be safe in a bear market. Just because, again, if I don't think we are, but again, I'm wrong half of the time. So if we are going to go into a bear market, then people are going to take a look at and they're going to say things like, okay, well, what is going to do well, or what is going to survive in a bear market? And Walmart is one of those where a lot of people think that the economy looking bad is actually bullish, for something like Amazon, and that's more or less because, or Walmart. It's more or less because people will go to cheaper stores when they're less certain about their incomes or the economy. So I think you're onto something there as a good kind of flight to safety, I guess, as a good one. And again, when I'm saying I don't think the market's going down, I am not talking about the SPY is I think the best way to put it, because as I showed you guys, the SPY is basically an ETF right now that tracks FANG, right? It tracks Facebook, Apple, Amazon, Google, all of these things, right? So, you know, if you see the SPY down another 5% over the next few days, if the IWM and the RSP and everything is doing relatively better, then I'm still right. This ASPN looks interesting. It's just a nice little pullback on a strong trend. So I'm watching this one. I just added it to a list there, and we'll see if that's going to do well. I see some comments, but let's do this first. Again, what I'm doing here right now is what all Stats Edge Pro members get, again, for $50 a month. And let's just go, I don't like to show a recent one, but right. So this is the output that you guys will receive kind of each and every day, right? Where I have my thoughts without me rambling incoherently for long periods of time on the market when it comes to all of these same things. So you get my thoughts like this, as well as a watch list of stocks every single day. We have a monthly Q&A webinar where it's 2 hours and I'll answer any question you want. And then we have a Discord room and access to all of my scans for both Trade Ideas and TrendSpider. Again, $50 a month, no commitment. I'm not going to do any yearly purchases or anything, I don't think. Maybe that's something people would be interested in, but I want to make it so that people can try, and then if for whatever reason they're not satisfied, they can just take off in the next month, kind of thing. Nice little community we're growing there. Certainly was not bearish on my end. There's nothing terrified if you don't hold positions for a long time. Yeah. Well, my biggest fear right now, to be honest, would actually be being in cash. Like and that just means for long periods of time, because whether or not you believe inflation is transitory, it's here. So, which is weird because you have the same people going, we're going into hyperinflation, stagflation, this is the end of the world, and the market is going to tank, this is the end of the world. And those things just don't jive in my head, because inflation actually means the increase of asset prices. So we're either going into a hyperinflation asset increasing period, or the market's crashing. It really can't, again, things like in high inflation periods, things like big tech, which we talked about, would suffer, but it means that hard assets would not. So again, if you believe that big inflation is coming, you have things to invest in the stock market, in which will do fine. And oil, gold used to be an inflation hedge, but it's obviously not anymore. Crypto, I think, has replaced gold as an inflation hedge. But what was the Jim Rogers quote? If you're worried about inflation, anything that you would drop on your foot and it would hurt, buy that, right? So again, not gold this time, but sorry. There was another one for look at DSX. Interesting. Little overextended right now. If you pull back to 550, base around for a little bit, and then start to push higher, that would be kind of how I would look at it. Again, not investment advice. I'm just some asshole on the internet. TGB, interesting, doesn't move. Copper, nickel, oil or mining. If you get all the way up to these screaming highs, you have, it's $2.50. So it's too slow for me, but that one looks good. Sorry, the wife. Oh, no problem. Yeah, anything with inelastic demand. And inelastic demand is just a fancy way of saying people that need shit, right? So things that you buy, like healthcare, housing, things like that are interesting. If we're going into a period of hyperinflation, which again, I think it's just like, there was a Bill Burr thing about, flat earthers and anti-vaxxers and that kind of stuff. Again, not getting into that on this channel, but he called them Fonzies, and I thought it was interesting. Same thing as perma bears, right? Fonzies always think the world are coming to an end, and I think that's just going to be the way it goes. I do not believe that short float on Beam, short squeeze.com. If that's right, that's going to be probably the one. Beam Global. Holy. Okay, I really like the look of Beam here. Let's grab that one. That's probably going to be the one I'll make a video about when this is done. Putting in essentially what I call a higher low play. I rarely, if ever, want to buy swing trading stocks as they're selling off like that. As I talked about, I fade a lot in my intraday trading, not so much in this one. What I want to see is I want to see a bounce, and then I want to see a higher low. And as they're making a higher low, I'm getting interested in them. And we've got a 39% short float, which I've confirmed on another website. They say 34, but it's about the same. So then I look at the shorter term pattern, and if, right, we can hold above this $30, that gets us out of this area. I think we could make it to 40, and then, maybe the shorts get nervous. So Beam, BEM Global is something interesting. Again, no idea what they do, don't really care. Solar powered products. Okay, so, more food for thought, right? I think solar and EV are in the same boat. Surf. Oh, Uranium ETF. Yeah, uranium's strong, right? You can get the same exposure through URA, right? Or any other uranium maker. But those, again, that's a very niche thing, so it will participate with other niche things with uranium. So just keep an eye on the uranium product. It's an interesting little one. I usually don't play stuff that high priced, but that one's a decent little look. Here's another mining stock for David, who was interested in mining stocks. That I actually like the look of this one a little bit better. Do they mine uranium? Oh, operates cryptocurrency mining. What's that flag? Is that Hong Kong? Yeah. Oh, thanks. Sorry. No offense. Just anything Chinese adjacent when it comes to crypto mining, I'm a little bit worried about. But that is a nice looking chart. CCCS, I am in some of this. I really do like the look of it. It needs to get and hold over 12 before I'm going to be really interested, and I may buy more if it gets and holds over 12. But yeah, for that surf, again, I just think, you just track uranium. If you think uranium's going higher, then that's going to go higher. I know it's a meme stock, but I almost look at that as kind of being a leverage to it. I want uranium and natural gas to pull in a bit before I'm going to be interested. I just can't buy stuff that's going out as well. UEC and uranium. See, again, the issue with, as soon as you look at anything that is, so pull that chart in your mind and then go to URA. It's essentially the same chart, but just a little bit a little bit weaker, right? And that's just Globex Uranium ETF. So again, it's gonna, if uranium crashes, your uranium stocks are gonna crash. If uranium rallies, your uranium stock's gonna rally. Getting into these smaller names, unless you're taking a bet that you think they're gonna discover something like a new mine or something like that, they're gonna track uranium pretty closely unless there is some sort of news. And it's the same thing that you probably notice you don't see me trading a lot of oil or precious metal miners or something. It's because you're more to the subject of the overall industry. Now, there's nothing wrong with that if you're bullish on that overall industry. So if you're bullish on natural gas, then go find some small cap natural gas guys. They're probably going to do very well. Surf is a physical trust. Okay, so that's going to track near 1-for-1. What I would watch with that, with a trust, is if the memers are getting it out of line, it's going to get back in line, and it's going to do so harshly because there's free money there, right? If you're a spot trust, like PSLV, if you're a spot trust, then if you get too far out of line, then there's arbitrage to be had. And when there's arbitrage to be had, there is unlimited, GBCT too, unlimited money to have. So if GBTC tanked, say it got out of line with Bitcoin by 20% or 30%, there would just be an easy play to there. That would be free money. Short Bitcoin, buy GBC, right? It's the oldest game in the book is arbitrage. Oldest game in the book. So, right, you got to make sure that you're playing on that. This F cell is interesting to me here as well. I'm going to add this one to the list. Same kind of synopsis as the other one, where you can short this, right? And I never want to buy it as it's bouncing, but it looks like it bounced. Put in a little bit of base and then go from there. Oh, no worries, Brett. And I hope that doesn't make you think that you have any chance in actually playing that arbitrage. Because again, like, this is one of those that you just got to trust me on, where there are funds out there. Okay, good. With no, but I'll finish my thought anyway. There are funds out there with billions of dollars that buy, the craziest story I heard was someone buying for like $10 million to get, it's like 6 feet closer to the stock exchange because the arbitrage they were playing was so fast that the speed of light was an issue, right? Where they're like, I need to get closer so that the speed of light doesn't slow down my trading. And it's like, those are the guys in the arbitrage game you're competing with, which sucks because I was one of those guys who played arbitrage games back in the day, right? I would look for things that were outside the market, and then I would short the market to hedge. And there's still ways to do it on a more discretionary basis, but not so much when it comes to pure arbitrage, right? LRCX. So I'm just going through this list. I'm not seeing too much. I do want to see strength. Especially, I do want to see a green bar today, because part of and maybe this is another rant that I'll do that I can edit out. How long into? I should really write these down. How long into the stream are we? I'm probably going to go a little bit longer today if that's fine with everyone. What does this do? Metamaterials, semiconductor. That's interesting. I'm going to add that guy. Anyone want to do a quiz of what pattern that is? It's my favorite. It's just the hardest to find. I don't see anyone, but it's cup and handle. And I don't keep the numbers, so I don't even know if there's anyone. Yep, I saw one guy, cup and handle, right? You have this big long cup, and then you have a little bit of a bear flag or bull flag after the cup. So I think if we break out there, you could just slam a stop in there, and you're not risking very much. And if we get a push up, that's great. Now let me run an anchored VWAP. Ooh, not that. An anchored VWAP from this IPO candle, and we are over that now, which is also very, very good. So we'll cap that. So what do I do? Yeah, we'll do another. Again, assuming, do I sound normally as good as I sound when I do my videos? Is it roughly the same? Same microphone. I don't have soundproofing, and I don't have it a centimeter from my face. But anyway, if not, I'll just do it again. But so what is my plan? It's fine. Okay. So what is my plan if I'm wrong and we are about to enter a bear market? This is something that someone requested. Essentially, it was, and I'll just go quickly here because I decided I'm going to record this separately, but whatever. I look for I'm obviously not long a lot of things if we're going into a bear market. But what I do is I scan every night for what is strong, right? And basically what I mean is I'll just find a scan with trade ideas. Again, if you're interested, link in the description below for all the tools I use. It's affiliate link. It will help with the channel, all that. I want to find what's strong because if the market turns, my experience has been what's strong during the pullback is going to be even stronger during the breakout. That being said, I also like to look at the VXX or other inverse ETFs, but I like the VXX the best. And the reason I like it the best is that if things get wild, we can push really, really, really high, really, really, really quick on the VXX, right? So this is your pandemic crash from 50 to 300, right? They can move incredibly high. And it's when people get nervous about the actual market itself. What I don't do often is short individual stocks because, again, the biggest rallies come in bear markets. And that's just a objective, provable fact. You can go and look anywhere. In bear markets like 2008 and the .com crash, all of those things, you get 20, 30, 40% rallies as these things are crashing. And in individual names, you get massive, right? Stock goes from 100 to 50, and then it jumps 50% to 75, and then it sells down, and then it jumps again another 50%, and so on and so forth. And it's one of those things that it's just the way it goes, right? We know that that's the way it goes. So shorting individual stocks is what everybody tries to do during a bear market, and I don't really see it. So again, the two things that I do, three things, we'll do three things, is I day trade more, I swing trade less, right? I chill out on the amount that I'm going to swing trade, and I day trade more aggressively. The second is that I look for stocks that aren't selling off. And again, a great example is Zoom. So let's go back to Zoom during March 2020, right? So here is the pandemic crash of 2020. Does that look like a crash to you? Right? So everything else in the world was exploding. Everything else was on fire. This was the toilet paper run of 2020. Everything was crazy. Zoom was basing around here in February. Broke that base, got a good push up, pulled back, based around for a bit, broke that base, nice little trade, right? So I go right to relative strength. where is the market flowing right away? And then to hedge, again, my favorite hedging instrument is the VXX. And that's just because, again, of the potential explosivity of it if the market turns. So that's my plan. Again, I always have it. If the market's selling, you just figure out what's not, right? No need to worry, right? The only people that get killed, like absolutely murdered in market corrections, are giant, long-term, massive institutions. And the main reason for that is because they're not as nimble as we are. Like, you should have a stop for every trade. You should be really nimble. Worst case scenario is there's some massive catastrophic event that occurs over the weekend or overnight or whatever, and you get hit 10-20% on your portfolio when it opens up the next day. And that's going to suck. But it's not going to kill you, right? And who is it? Is it William O'Neill? There's a quote from a famous trader that I always love that basically said there's more money lost in preparing for a correction than there is in the correction. And I find that wholeheartedly with traders, that holds true. Just absolutely wholeheartedly. That everybody is so worried that the market is going to crash that it's going to, they buy, as the market rallies, they're buying inverse ETFs. As these things happen, they're buying all of these things. Let me take a look real quick. Man, that was a landline phone. I don't know when I've ever heard a landline phone recently. It scared me for a second. I said, what the hell is that? Actual physical phone with a cord on it. It's wild. But yeah, so that's my plan, right? Is you look for relative strength. If you weren't in financials during the financial collapse, I remember oil rocketed. If you were in non-tech things during the tech market crash, you did fine. If you had during the pandemic crash, if you were in Netflix, Amazon, these things, there's stuff always going on, and use relative strength type filters, which we have in Trade Ideas, and you could build in TrendSpider and things like that, that will always point you on the side of relative strength. The problem that happens in bear market is people go deal hunting, right? They look to buy things that are crashing. Again, I just do the opposite. I just say, hey, what is not participating in this crash? I think that will be the strongest thing going forward. Let me make a list of those and let me buy them when I see the market gaining some strength. And then day trading, right? Day trading is a very good thing to do when volatility is high, because when the market's crashing, volatility is going to be very high. So when volatility is high, instead of buying something and holding for a week, you may be able to buy that same thing and hold it for a day or a couple hours and make more money that way, right? So we've been in an extended bull market for an incredibly long period of time, and I have been focused pretty much entirely on swing trading for that reason. And again, if we're going to go into a bear market, I'm going to focus way less on swing trading and way more on day trading. And again, you just need to, it's our advantage to be quick and nimble, whereas the giant mutual funds, hedge funds, things like this, they can't be. So you got to play to your edge, and your edge is that you don't have to do the same thing forever. And again, seize the day. If that, like this is the only way I can say it. If that trade is part of your written trading plan and you got stopped out, that sucks, but it's fine. If it wasn't part of your written trading plan, you need to do some psychological journey about why you didn't follow your written and tested trading plan. If you don't have a written and tested trading plan, please stop trading. You're donezo, right? You will at some point blow up your account entirely. And it's just, I just know it for a sheer near fact. Traders that have trading plans do well. Traders that don't have trading plans eventually lose it all. And it's just because, this is a stressful journey that you're not always going to be profitable. Again, the best traders in the world are only right half-ish of the time, maybe a little bit more, not generally very much. So the ones who have a written and disciplined trading plan with good risk management that they can refer to at any time, they'll be able to weather these storms. The ones that are shooting from the hip without a plan, they get run over, right? So again, if it was part of your trading plan and you got stopped out, that's fine. Don't adjust your trading plan based off of a single trade. If it happens consistently that you're getting stopped out of winners, then in your trading plan, go back and test a different stop loss metric, right? But again, if this one trade mattered, then it was too big, right? I took 5 or 6 day trades today. I don't like to show results or anything. I think that's a bit douchey, for lack of a better term. But and they were all winners today. That's not the way it's always going to be. Oh no, I traded Smile Direct class twice, and once I lost, the other one I gained on. But again, they were all part of my trading plan. So if they were all losers, that's fine, because they're all part of my written and tested trading plan. And that's what it's all about. So I'll look at DDI. I'll open this up now for I got stocks that I'm watching at. Hold on, this Beam is going to be the one I'll make a video about in a second. This is a really good looking one. DDI looks good, new issue. South Korea. The thing I like about these new issues, pretty clear, right? So I would say a close above 18, you're probably good. And then, back below 17, you're probably wrong. So you get to risk $1 per share. And the question is, do you think it can go higher than $2? So go above 20, right? If you're risking 1, you need to move 3, then away you go. And that's kind of all there is to it, right? All right, guys, so that will be it for me tonight. I got to go grab something to eat. Again, thanks for coming to this special at my parents' house edition of this. On your way out, if you can hit the like button. If you haven't, again, I get yelled at from YouTube all the time about that. I will do the videos and everything, and I'm probably going to do for the Stats Edge Pro people. I'm going to do all of that for you guys tonight. If you are not a member of Stats Edge Pro, again, you get the summary of everything that's going on here, a Discord room, access to all of my scans, and a once-a-month webinar where I will go over any question in great detail for whatever you have, and that's $50, which I think is a pretty damn good deal. So give it a shot, and I hope to see you guys there, and I will see you guys next week.